Let's get the big picture with Jeff Lindsey. He's the head of BlackRock's fundamental large cap growth equity team and lead portfolio manager for all fundamental large cap growth portfolios. Jeff, welcome to the close. I mean, when you look at the macro picture, how consumed are you guys by it? We obviously are in terms of what's going on in Washington. We keep watching Europe too. But how consumed are you, especially when it comes to making investment decisions?
Well, clearly we have to acknowledge that this is what's driving the market in recent days, and when we get some resolution to this, then we'll see if this is a trend that deserves to continue, or if we get a reversal. You know, I don't know exactly what happens next. I stay fully invested, but I tilt the portfolio one way or the other. Right now, I'm a little worried, like most people.
So you're tilting it based on what we're getting out of Washington at this point? You feel like you have to?
You know, at the margin, I have been a little bit aggressive and am taking the edge off of that very slightly. So I'm talking about at the margin, just being a little cautious here and acknowledging that things in Europe have worsened, and want to see a good resolution to this scenario. And there's a potential to just get better buying prices for the more aggressive stocks in the next few weeks, but I don't know that.
Jeff, what do you think about the earnings that we've seen? I mean, we've acknowledged that the positive surprises have been higher than average. On the other hand, I was looking yesterday at growth. It's only 16% on profit this quarter versus 26% profit growth last quarter. And some of the outlooks are starting to concern people a little bit. So what do you think about earnings season?
Yeah, if you just take the numbers at face value, it continues to look quite good. Lots of earnings beats. I think we're on pace for $100 in earnings per share for the S&P 500, so it makes the market cheap. But when you dig into it a little bit, certainly some questions on the quality of the growth. A lot more dependence on the weak dollar benefiting the multinationals. A lot of companies benefiting from tax rate, margin pressure here and there, and squishy guidance. So it's not all good. It's not as good as it looks on face value, really.
Hey, hang on for a second, guys, because we do have some earnings. We're just talking about earnings. We do have some earnings crossing the Bloomberg terminal as we speak. And we're talking about Whole Foods crossing. And I know, Julie, you've been on earnings watch. How are they doing?
Well, Whole Foods coming out once again and beating estimates, beating earnings per share estimates by 2 cents. It looks like coming in line in terms of sales estimates, but the company is boosting its forecast for all of 2011. Comparable sales, since that's an important retail measure, up about 8.4%. That's in line with the analyst estimates that I saw. Whole Foods has really been an outperformer over the past year as people have continued to pony up for organic foods and what they perceive to be healthy foods, unprocessed foods. Whole Foods sort of marketing campaign has been successful. I believe that's my local store that we're seeing footage of, in fact, on Houston Street here in Manhattan. And so this is a stock that has done very well. As you can see, it continues to rise even more in the after hours. I'm going to go into the statement and see what kind of commentary we're getting from the company.
So, Jeff, looks like we're getting decent numbers from Whole Foods. We do have the stock up about 2.25% here in the aftermarket. You like, in terms of consumer stocks, discretionary over staples. Whole Foods, do you consider them a discretionary? I mean, they can be pretty pricey, but I'm just curious, a name like Whole Foods, do you like it? Do you consider it discretionary?
Yes, I do like Whole Foods, and we own it. They're in a great competitive position. They really stand out among grocery stores. I don't know, call it what you want. Discretion, it's certainly both. They sell a staple, but it's not for everybody. It's a little upscale, so it's a hybrid. But I do like it, and you can't point to any economic factors that are showing up negatively at Whole Foods, that's for sure.
Well, and you do like consumer discretionary. Are you betting on the consumer, or is it just that companies have gotten smarter in terms of dealing with costs and so on, and maybe potentially some weakness in the economy?
Yeah, it's interesting. I'm not betting on the consumer, but there are individual companies like Amazon that just have such a huge trend of online shopping behind them, and there are hotels that are still benefiting from cyclical upturn in business travel and travel in general. So it's more like companies who have suffered some weakness over the past few years, and things are still getting better as we speak. But I want to continue testing myself and make sure I have the confidence that continues if the economy worsens here.
Hey, let me just quickly get to Visa here, Julie, because they're coming across. We're looking for 123. Is it a positive or a negative surprise here?
126. So that means it's the 14th straight quarter that Visa has beat earnings estimates. The revenue coming in pretty much in line with estimates, a little bit better than estimates, $2.32 billion. $2.3 billion was the estimate, so effectively in line for revenue. The company is also announcing a buyback of shares up to $1 billion worth of its shares. The company says in the third quarter, payment volume growth was 13%, which is impressive. Some analysts going into this report had looked at it and said, well, if you've got a little bit of weaker consumer spending, what is that going to do to Visa? The company in the statement saying they're addressing the new regulatory and landscape, and given that, we are prepared to deliver on our financial goals, is what the CEO, Joe Saunders, says in the statement. Obviously, there's been a lot of changes in terms of the fees that we have seen for Visa and for some of its competitors, Carol.
Hey, Jeff, you don't like the financials, or at least you're cautious on them. What about a name like Visa at this point? These numbers looking good. They're talking about a $1 billion buyback here. Any of the financials, are they exceptions that are worth buying at this point?
Yeah, sure, there are exceptions. You know, in general, I comment that I don't favor financials because I don't know how all these new regulations are going to be implemented, what the rules are, and how many companies in the industry are going to make up for fee opportunities which have been taken away from them. That was certainly the case with Visa for a while, whose business model was up in the air with the Durbin Amendment, but that's now resolved. So, sure, great trends at a company like Visa. Moody's had great earnings today, and they are, they're benefiting from a boom in refinancings. So, sure, there are individual companies for sure, but in general, the uncertainty with regulation, similar to what the issue with the whole market is. I don't like it.
Jeff, we kicked off this interview and I asked you if you were kind of adjusting your portfolio in any way because of what was going on in Washington. And what we're finding, I know, Sheila, you've been covering this, is that the debt ceiling is actually driving a lot of investors, or a lot of buyers, I should say, to one well-known retailer.
Yeah, it's very interesting because treasuries are always known as a classic safe haven safety trade here. But what we're actually seeing right now is something different. So we're actually seeing investors snap up corporate grade bonds. So we're talking about very strong corporate quality bonds like AAA bonds like a J&J or a Microsoft or even a Walmart. So if you take a look at these issues over the past couple of weeks, you've actually seen the spreads of these narrow relative to treasuries. And also they have outperformed as well. In fact, we took a look at an index of AAA rated corporate bonds, and they've actually been outperforming treasuries in July. And then even if you take a look at the past 6 months, they have outperformed treasuries in 4 out of 6 months. Jeff, my question is to you. Are you surprised to hear this, that consumers are actually flocking towards these quality corporate names because there's so much uncertainty about what's happening in Capitol Hill right now?
And my surprise? No, it's very logical that for the time being, should you have more confidence in the bonds of a AAA company that has a multi-decades history of supporting that versus the uncertainty of the government? No, it's very logical.
Hey, we're going to leave it on that note. Jeff, thank you so much. We appreciate you walking through the close on this Wednesday afternoon. Jeff Lindsey is the Managing Director, Portfolio Manager over at BlackRock.